On the morning of February 9, 2026, a single post on X changed the conversation about the internet economy. Jimmy Donaldson, the 27-year-old, known to 471 million YouTube subscribers as MrBeast, announced that his company, Beast Industries, had acquired Step, a financial technology app designed specifically for teenagers and young adults. The post was characteristically direct. "I want to give millions of young people the financial foundation I never had." The internet applauded. Financial regulators took note. Senator Elizabeth Warren picked up a pen. And somewhere between the celebration and the scrutiny lay a question that nobody had quite answered yet. What does it actually mean when the most watched human being on the internet acquires a banking app used by more than 7 million young people and then files a trademark for something called MrBeast Financial, with language explicitly mentioning cryptocurrency? This was not a sponsorship deal. This was not a brand collaboration. This was a full acquisition, and it put one man's influence directly inside the financial lives of millions of teenagers. To understand what the Step acquisition means, you have to understand what Beast Industries has become. Most people know MrBeast through his YouTube videos, elaborate stunts, massive giveaways, philanthropic challenges. Those videos generate billions of monthly views. But they are not the core of his business. Beast Industries is a multifaceted conglomerate. Its most profitable division is Feastables, a snack brand reportedly more profitable than both the YouTube channel and the Amazon Prime Video reality competition series Beast Games. The company also runs Beast Philanthropy, a non-profit arm. With approximately 500 employees and a valuation of roughly $5.2 billion as of January 2026, Beast Industries is not a content studio. It is an empire in active expansion. In January 2026, just weeks before the Step deal, Beast Industries disclosed a $200 million investment from Bitmine Immersion Technologies, the largest corporate holder of the cryptocurrency Ether, chaired by Fundstrat's Tom Lee. That is not an irrelevant detail. It is context. Beast Industries was entering the world of finance with a crypto-connected investor on its books, and it was simultaneously preparing to acquire a banking app used by millions of teenagers. Donaldson had signaled his financial ambitions even earlier. In October 2025, Beast Industries filed a U.S. trademark application for the name MrBeast Financial, seeking registration for a mobile app, online banking services, and software-as-a-service financial products. The application mentioned cryptocurrency 4 times, cryptocurrency exchange services, cryptocurrency payment processing, and references to decentralized finance. Before a single teenager downloaded a new version of Step, the blueprint for what MrBeast Financial could become was already filed in a government database. Step was founded in 2018 by Fintech veterans C.J. McDonald and Alexei Kalinichenko with a clear mission: bring financial tools to the generation that needed them most but was most consistently locked out of them. Teenagers in the United States cannot open bank accounts without a parent. They cannot build credit history. They cannot access investment products. Step was designed to change that. The app offers a Visa-based debit card, a savings account, credit-building tools, early access to direct deposits, parental supervision controls, and spending management features. It is not a bank itself. Step operates through a partnership with Evolve Bank and Trust, which is FDIC insured and provides the underlying banking infrastructure. Users under 18 require parental consent to access certain features. By the time of Beast Industries' acquisition in February 2026, Step had grown to more than 7 million users, raised over $500 million in equity and debt financing, attracted institutional investors, including General Catalyst, Kochu Management, Collaborative Fund, Crosslink Capital, and payments giant Stripe, and signed on a roster of celebrity backers including Charli D'Amelio, Stephen Curry, Will Smith, and Justin Timberlake. In 2021, equity investors valued Step at $920 million. By 2026, according to reporting by The Information, that valuation had likely declined. Step had done something genuinely difficult. It had built financial tools that teenagers actually used. 7 million of them. That is the asset Beast Industries acquired. STEP's most controversial chapter predates MrBeast entirely. In 2022, the company announced an aggressive expansion into cryptocurrency. STEP claimed to be the first financial app that will allow both teens under 18 and young adults to buy, sell, hold, and receive crypto with parental consent. It later advertised access to more than 50 digital assets and NFTs. The regulatory and reputational environment surrounding crypto deteriorated sharply through 2022 and 2023. The collapse of FTX, the implosion of multiple crypto platforms, and the broader crypto winter made the asset class politically toxic. STEP quietly backed away. By 2024, the crypto features had been removed. The company's own materials began describing non-Bitcoin crypto as extremely risky and volatile, and NFTs as high-risk, full of scams. But Senator Warren's subsequent investigation uncovered something that had not disappeared quietly. STEP had previously published resources encouraging children to pressure their parents into allowing crypto investments. In Warren's words, the company had given kids a script, not a suggestion, a script, for pressuring adults about speculative assets. That history did not vanish when Beast Industries acquired the app. It became the foundation of the regulatory scrutiny that followed. When Beast Industries acquired STEP, its CEO Jeff Hausenbold did not describe the deal as a simple fintech purchase. He described it as a platform one that could redefine financial services for the next generation. Those are large words. They raised a specific question: redefine toward what? The answer emerged in fragments. The MrBeast financial trademark application mentioned cryptocurrency exchange services and DeFi integration. In a statement made around the time of the acquisition, Hausenbold said the company was looking forward to exploring ways to further collaborate and incorporate DeFi into our upcoming financial services platform. DeFi, decentralized finance, is the sector of crypto that operates outside traditional banking regulation on blockchain-based protocols that are largely uninsured and frequently exploited by scammers. Beast Industries also publicly disclosed its $200 million investment from Bitmine, an Ethereum treasury company, just weeks before the STEP deal. Taken together, these signals pointed in a consistent direction toward a financial services platform that would combine MrBeast's unparalleled audience reach with cryptocurrency and DeFi products. The intended customers were, by design, teenagers. The uncomfortable question, as one financial analyst put it, is whether the existing regulatory framework is equipped to evaluate this kind of deal at all. Senator Elizabeth Warren sent a 12-page letter to Jimmy Donaldson and Beast Industries CEO Jeffrey Hausenbold on March 24, 2026, with a response deadline of April 3. Warren, the ranking member of the Senate Banking, Housing, and Urban Affairs Committee, did not accuse Beast Industries of wrongdoing. She asked more than a dozen specific questions. The letter's concerns were precise. First, Beast Industries has no prior experience managing a regulated financial technology company. Its track record is in entertainment and consumer product skills that do not transfer directly to compliance, fraud prevention, or the legal obligations that come with holding the financial data of minors. Second, the MrBeast financial trademark application mentions cryptocurrency 4 times. Given STEP's prior crypto history, what exactly are the plans? Third, and perhaps most pointed, 39% of MrBeast's YouTube viewers were between the ages of 13 and 17 as of April 2025. That means roughly 183 million of his subscribers are teenagers. If even a small fraction of them become STEP customers following a single MrBeast video promoting the app, the user base could expand by millions overnight. The scale of that conversion, Warren argued, creates a responsibility that ordinary fintech companies never face. Fourth, Evolve Bank & Trust STEP's banking partner is not without its own complications. The bank has been embroiled in legal battles surrounding the shutdown of banking as a service middleman. Synapse in 2024 suffered a data breach that affected multiple fintech partners and settled a related class action lawsuit. Because Step relies on Evolve for Fintech insurance and card issuance, Step's customers, including minors, have extensive personal and financial information stored in a system with a documented compliance history. Beast Industries' corporate history raises concerns about its ability to manage a financial technology company, particularly one targeting children and teens. End quote. Senator Elizabeth Warren, March 24, 2026. The Step acquisition was not the only financial controversy surrounding Beast Industries in early 2026. Just before Warren's letter, Kalshi, a regulated prediction market platform, disclosed that it had taken enforcement action against a Beast Industries video editor. The employee had allegedly used advanced knowledge of MrBeast's upcoming video topics to execute near-perfect trades on Kalshi's platform, profiting from insider information about content before it was published. Beast Industries fired the employee. But the episode illustrated something structural. MrBeast's influence over markets and consumer behavior is now large enough that knowledge of his content schedule constitutes valuable trade-worthy insider information. When the world's most watched YouTube creator is also the owner of a banking app used by 7 million teenagers, that kind of influence takes on a different weight entirely. Nobody disputes the problem Beast Industries is trying to address. Financial illiteracy among young Americans is real and documented. Teenagers graduate high school without knowing how credit scores work, what compound interest means, or how to avoid the debt traps that follow millions of young adults into their 30s. Step's core value proposition, accessible, fee-free financial tools for young people, addresses a genuine gap. The concern is not the mission. The concern is the mechanism. When a person with 471 million subscribers, 39% of whom are teenagers, acquires a banking app and files a trademark for a financial platform that mentions cryptocurrency 4 times, the line between financial education and financial influence becomes difficult to locate. Advertising regulations that govern traditional financial institutions do not automatically apply to a YouTube creator who mentions an investment product in a video watched by 50 million people in 48 hours. Gamification is a related risk. Apps designed to engage teenagers use the same psychological levers as social media streaks, rewards, progress bars, achievement badges. When those levers are applied to spending, saving, and investing, the distinction between building good habits and manufacturing addictive financial behavior becomes genuinely unclear. No one has yet determined which side of that line a MrBeast-branded banking app will land on. Beast Industries' official response to Warren stated that the company is examining all existing offerings and marketing approaches to ensure Step's future is developed thoughtfully and deliberately. That is a reasonable answer for February 2026. Whether it remains the answer in 2027, when MrBeast Financial potentially launches with DeFi integration, remains to be seen. The question is not whether MrBeast's intentions are good. By all evidence, they probably are. The question is whether good intentions, in the hands of someone with 500 million followers and a freshly filed trademark for a crypto-enabled financial platform, are sufficient protection for 7 million teenagers who have just handed him their money.